I don't know if you saw it this morning, but the 10-year note is now over 4%. Yes, folks, the 10-year note has gone on a near straight line from about 3.65 to 4%. Last time I checked just a minute or so ago, it was 4.02. What does this mean? Well, it means mortgage rates are going to be going up. That's for sure. But again, we need to realize where we are. What is changed? Goolsbee, Fed President Goolsbee, was interviewed, I think, a day or so before the jobs number on Friday, and I think this was a Forbes article. I think Forbes or Fortune. I think it was Forbes, where basically Goolsbee said that historically speaking, if you were to ask him what is the most important economics number, it is the jobs number that comes out or came out on Friday. What he did say in that interview is something that all of us probably know and feel is we have seen a pretty significant move down in the adjustments. So that number that used to be the most important metric no longer is. So again, most of us are expecting revision. There was a very low response rate, yada, yada, yada. But what happened? Again, rates moved. The cost of capital got more expensive. What do we have ahead of us this week that either will continue to move rates higher or finally help us pull back? And we have two inflation readings, one on Thursday, one on Friday. We do also have the Fed's meeting minutes coming out on Wednesday, and we have start to earnings season. All of these things could be impactful. When you look at the bond traders with the 10-year now over 4%, the odds of a 50 basis point cut in November is no longer 50%, no longer 25, it is now 0. In fact, for the first time, I am seeing a 12% chance of no cut. 12% chance of no cut, leaving 88% with another quarter. I think generally speaking, we are going to see much slower, no more jumbo rate cuts from the Fed, especially with these numbers. Also, remember, CPI headline inflation is expected to go down. Last read was 2.5, 2.5. It's expected to go to 2.3. Please don't forget to look at CPI core. CPI core is expected to be flat, I think at 3.2. So again, we need to watch this. The other thing I'm looking at, we saw a bazooka of stimulus in China. I don't know if you saw this, but the Chinese stock market in the last 10 trading days is up 36%. 36%. That is quite a run. We've got some commentary from Fed pundits. David Roche, founder of Quantum Strategy. The jumbo cut, this is the one that just happened, this jumbo cut has made the Fed look silly, populist, and panicky. Yes, David Roche, not a big fan of the 50 basis point cut. Another one, Catherine Rooney saying no cuts the rest of the year. We are seeing a pretty big divergence. So why is the Fed cutting? Right? Again, we've talked about it a bunch. The Fed is trying to thread the needle for this soft landing. The Fed knows or believes that the cost of capital is too high today. We're going to find out, right? We're actually going to get some earnings coming this week from JP Morgan, Wells Fargo, and then a lot more folks next week. I'll be looking at JP Morgan's earnings because I want to see their net interest margin, right? Now that rates are coming in, they're lowering savings rates, doing these things. Also, is the money staying in money markets or is it being put to work? There's a lot of data that we're going to get from the financials. We also get PepsiCo, I think tomorrow, and we get Delta Airlines, I think on Wednesday. What's going on with the consumer? right? We're going to get a lot of stuff. I do have to ask myself a question though. With the 10-year note over 4 and mortgage rates probably going to 6.6 or I don't know, 6.7, has the refi boom hit a wall? And it may have, right? This move now, if mortgage rates move again this afternoon, we're going to be up about 60 basis points since the Fed rate cut. I think that is certainly enough to put pause on a lot of refis. Now, it will be interesting. Again, the rates are up this morning. It'll be very interesting to see if we end up higher by Friday. I think a lot of this, that Friday move was violent, right? That's 27 basis points in a single day for the mortgage rate. It just felt like a lot and too fast. So we will see that. We did have an accountability school yesterday. Ran 2 hours, talked about tenant selection, out-of-state investing, and just more and more folks sharing their story, getting to know each other. It was attended by 12 folks and again went for 2 hours. Shout out Jared for that. Also, the Monday morning school accountability group would have finished just a little bit ago. I don't have an update on that one, but I'm sure it was amazing. I will also like to tell you that we have slipped from the number 3 school to the number 4, and now this morning, folks, the number 5 real estate investing school. Yes, we are going the wrong way. I need to have more action and activity in there. Look forward to that. I'll be putting a lot of work into that. We are doing a school session. If you look at the calendar tomorrow, we're bringing on the guys from PropStream to talk about how you can use their platform to hopefully help you write better and better deals. Look for motivated sellers. Look for high equity. Look for all of those things. We also get Wells Fargo on Friday. So again, JP Morgan, but also get Wells Fargo. They're often very different reports, but I'll be looking for reserves for bad debt, net interest margin, loan originations, what is going on. All of that will be very interesting to me. And then the last thing, we had a great conversation with Ulysses from Macro Edge yesterday, and we talked about the mortgage spread. Ulysses had a couple of charts that talked about, hey, when the spread is coming in and the job market is strong, this may happen. And oh, by the way, if it's getting bigger, this might happen. It was a very interesting conversation. Again, the mortgage spread historically is about 180 basis points. Today, I still think it's sitting at like 235 or 240. So there is still some room in that. But again, it'd be very interesting to watch spreads. Again, what I think is happening is we're going to start to have banks compete. I do think the mortgage and the real estate industry has already bottomed, and then we could start working our way out of that. So lots of stuff going on today. If you are in the Florida area, be very, very careful. That hurricane seemingly overnight went from a category 1 to a category 4. I believe it's called Milton. So be careful. Don't mess around with the hurricane. Pretty wild to see. I don't actually ever recall one starting that far west and hitting Florida. That something's going on in the Gulf jet stream or something. But yeah, that was a crazy increase, category 4 overnight. So be careful out there. Like, subscribe, comment, become part of One Rental at a Time. Join school, $20, boot camps, education, a great community of folks, 3 accountability groups, opportunities to interview and work with millionaires. Folks, take care of yourself. Have a great day. Bye.